Welcome to the Kapital News. I am your host, Alex Koritis. Today is August 27th, 2019. Thank you so much for joining me. The topic of today's podcast is going to be about the silver rush, this new precious metals market bull run that I believe we are just in the very early innings of, and then market disbelief. And this market disbelief is a continuation of what we have been discussing here for quite a while at the Kapital News. We talked about this yesterday. We talked about it last week. What we're talking about here is, who do the markets believe? Do they believe President Donald J. Trump, or do they believe the Chinese government? Because now we are in that dichotomy. Now we have a binary situation because we have a difference of fact. Somebody's lying here. Is it Donald Trump or is it the Chinese? Because we have Donald Trump saying that there was a great phone call that took place the other day. Stock market rallied yesterday because he said, well, there was a fantastic phone call. Everything is obviously fantastic. Everything is great. Everything is a success, regardless of whether it is or not, regardless of whether it even took place. So there was a fabulous phone call that took place. China wants to come back to the negotiating table. There were reports out as early as yesterday where you had the Chinese foreign minister come out and say, no, we are unaware of any such phone call. They are denying any such phone call. So, there was a phone call or there wasn't a phone call. Who do you believe? Well, the markets were clinging to hope. That's the environment in which we live. We've been talking about this since this podcast has been on the air since February of this year. So anything that seems and sounds positive, anything that gets the markets away from looking at the underlying fundamental economic and financial data, they're going to do it. And if they can scalp a quick profit off of Thunder Thumbs making a positive tweet about this trade war, they're going to do it. They don't care about your 401k. They don't care about your current situation, whatever that might be, financially, socially. They don't care. The addicts on Wall Street and the algorithms and this computer trading, they don't care about you. They're just looking for the headlines. They're just looking to make a quick buck. That's the world in which we live. There is no society. Everything is about the almighty dollar. All right? But nevertheless, that's the world in which we live, and you have to be prepared for it. You have to be diversified. You got to pay attention to it, at least to some degree, because you are affected by it. Whether you agree with this or not, you are. This affects prices. This affects the market. And I don't just mean the stock market and the bond market. I mean the market for all goods and services in which you consume and use on a daily basis. So the markets, quote unquote, believe Trump on Monday. Today, we have the markets selling off a little bit. And we have some members of the stock exchange, the New York Stock Exchange, Art Cashin. If you listen to him, he will be interviewed periodically on CNBC. He doesn't believe Donald Trump. He doesn't believe that a phone call took place. You think he's the only one down there? He's like the director of floor operations at the New York Stock Exchange. You think he's not having conversations with everybody on the floor every day? That's his job. You think everybody agrees or believes the President of the United States? No, they don't. I don't believe the President of the United States. This is exactly what I have been concerned about for the past few months. This is exactly why I wrote a letter to the President saying this is what is going to happen. I didn't want it to happen, but here it is front and center. And this isn't the first instance of this since I wrote that letter back in May. This is a continuation, but now there's escalation in the midst of it. And now the Chinese are starting to become more vocal on the global stage. What they might have said in their national newspapers, what they said in their national media, it sort of stayed off the cusp. It stayed on the sidelines. But now it's front and center. Now it's front and center. And the markets, I believe, unfortunately, are going to start to believe the Chinese over the United States of America. This is a sad day in the history of our republic. Does the president know about this? Does he care about this? That's a legitimate question. I don't have the answer to that. I mean, clearly by his actions and his demeanors and his language on this stuff, he must not care. He must not care, or he doesn't know. Either, both are hugely unacceptable. We can take a hit to GDP. We can win or lose this trade war, whatever you want to call it. Nobody truly wins these things. But let me tell you something. The fact that the President of the United States and the office of the presidency is losing its credibility because of such stupidity, that's an outrage. I didn't vote for this, and I'm sure most of you didn't vote for this either. I mean, forget GDP, forget your ego, winning or losing this thing with the Chinese. What about the office of the President of the United States? Does that mean anything to anybody anymore? Or is it all about dollars and cents? Is it all about how much corn we sell to somebody? Is it all about soybeans? Does anything matter? Do our institutions matter anymore? Does the office, does it still earn our respect? Does it still have our respect? Should it? I like to think that it does. I like to believe in these American principles and ideals. But when you have politicians, and again, this is not just me picking on Donald Trump. This is past administrations. This is past members of Congress, current members of Congress too. But Donald Trump's the guy right now. He's thrown a lot of this on his shoulders. Foolishly, in my opinion. But he's done so, and now he has to live with it. He cannot take credit for everything that he deems good and blame somebody else for everything that goes south. That's not how it works. That's not leadership. If you want to take credit for the good, you got to take credit for the bad. It's that simple. Otherwise, wash your hands of both and try to really implement structural change. Of course, that's not taking place. Not for a second. The compromise we get between the White House and Congress, and primarily the Democrats, is an increase to the debt ceiling. $1 trillion deficits as far as the eye can see. There isn't anything fiscally conservative about that at all. And where are the Republicans writing their letters? Where are the Republicans standing up to this president saying this is enough? We cannot do this. This is not what we were elected for. This is not why you were elected. Yet here we are getting closer and closer to $23 trillion, and it will go up much faster over the next couple years because we will be in recession, because recessions have not been outlawed. There could be a trade war truce. There could be a trade deal. It's all smoke and mirrors at the end of the ball game. It's only exacerbating the underlying problems. These financial metrics, these economic metrics that we talk about here on a daily basis, were already slowing down. They were already rolling over. What this trade war does is it just exacerbates them. It just speeds it up. That's all it's doing. It's not good, but that's what it's doing. Taking this away does not stave off recession. It is coming. And recessions are healthy things. It is a necessary process to get rid of the waste, to get rid of the malinvestment. And my goodness, is there a ton of malinvestment the world over? We have $17 trillion in negative yielding debt around the world. There are junk bonds that have negative yields. Junk bonds that have negative yields. This makes no sense whatsoever. Dr. Seuss of financial markets couldn't come up with this crap. But this is where we are. And this is why we are in the midst of a precious metals bull run market. But this market disbelief, this is really hitting front page news. This is center stage now. This is right in front of us. This is no longer Donald Trump coming out, tweeting, trying to manipulate the markets, which is exactly what he's doing. Getting them up. Markets are going down. Let's tweet something. Let's send Larry Kudlow out there. Let's send Treasury Secretary Steven Mnuchin out there. Let's send the idiot Peter Navarro out there and say everything's fine and we're going to continue to talk. And there were beautiful phone calls and lovely letters and everything's just rosy and peachy and we're going to have a deal. Now the president's even, again, he is calling China to the table. He's saying they have to make a deal. They have to come to the negotiating table whether they want to or not. What's the incentive for China to now come to the table? They would look incredibly weak. So if you're trying to think about this strategically, if you're trying to think about this in the midst of the 2020 presidential campaign, what is Donald Trump perhaps doing? Does he actually want a deal, or does he want a boogeyman? Right? Because if this market does sell off, and if the economy does roll over, you know he's not going to take responsibility. So if there's a trade deal, and there's still a recession, now who's to blame? Maybe the Federal Reserve, maybe he'll continue on them, who knows? But he ain't going to take responsibility for it, not for a second. So he wants a boogeyman. So if he can delay a deal and he can hinge his campaign for the presidency in the 2020 elections on pointing the finger at China and the Federal Reserve, he has two outs. He can blame the Fed, he can blame China, and who knows who else he could blame in the midst of all of the chaos that we will witness over the coming year and a half. But he's not going to take responsibility. Again, poor leadership. But that's what he's going to do. That's most likely. Because I really don't think a deal is going to be struck. Because who's going to believe either side? Who could believe that Donald Trump will keep to the terms of this deal, whatever it is? And who's going to believe that the Chinese are going to keep their terms? Nobody. That's the whole argument here. That China has been screwing over the United States because we make deal after deal after deal, administration after administration after administration. China's eating our lunch. They never follow through with anything. Case in point is the trade truce at the end of June, following the G20 summit in Osaka, Japan. Oh yeah, it was fantastic. It was a trade truce. Oh, everything is beautiful. The Chinese have promised to buy more and more U.S. agricultural products. Our beautiful farmers are going to make out like bandits. What happened? Absolutely nothing. They did not buy vast amounts of U.S. agricultural products. Of course, we were not in any hurry after this. We've been told that multiple times by Donald Trump. We're not in any hurry. We just want the best deal for the United States. And then a week later, President Xi's taking too long, and they promised to be buying U.S. ag products. They're not doing so, so boom, we're going to smack more tariffs on them. China retaliates. We're halting all purchases of U.S. agricultural products. Fantastic, marvelous. And of course, in the midst, again, you have Donald Trump saying they promised to buy more agricultural products, and China saying, no, that was never part of the deal. So who do you believe? Who do you believe? Now there's phone calls. What's it going to be tomorrow? Who knows? We had the S&P lose 0.3%. The Dow lost 0.5%. The Nasdaq also was down 0.3%. The Russell 2000, the small cap index, actually was down 20 points, a loss of 1.35%. So quite the discrepancy here between the small caps versus the big boys. Is this indicative of something to come? Because the Russell 2000 is in correction territory, and it is close to a technical bear market once again, in a bear market being defined from the Wall Street definition of a decline of 20% from its recent high. We are almost there with the Russell 2000. The Dow Jones Transports was also down 1% for the day, and the New York Stock Exchange lost an additional 0.4%. Oil is trading at $55.60 a barrel. Brent is at $60 a barrel. This is on the hopes that these beautiful phone calls actually took place and that there could be some sort of trade agreement or trade truce. So doesn't growth look marvelous for the global economy? Gold is trading at $1,534 an ounce. Meanwhile, silver rallied about 3% in intraday and is now trading at $18. Yes, you heard me correctly, $18.17 an ounce. This is a 28-month high for silver. A 28-month high for silver, and I don't think we've seen anything yet. Now, remember, folks, I say this all the time because it's true. Nothing goes straight up, nothing goes straight down. But I strongly believe that we are in the midst of a new precious metals bull market. The very, very early innings of such. A lot of people have not caught on to this. A lot of people are still scratching their heads looking for yield, looking for dividend yield in the S&P 500, maybe some big companies, some growth stocks in the Nasdaq. Maybe they're looking for bonds, looking for safety in bonds. I mean, clearly, gold and silver are catching a bid, but this is nothing. You still got people out there who think Bitcoin is going to be the savior of all of this. That's a bunch of nonsense. That's a mania. I mean, get lucky. I mean, if you think you can get lucky and time that thing, bless your heart. Good luck to you. I'm not really getting involved with Bitcoin. All right? Just not doing it because, one day you wake up, you're a millionaire, the next day you're broke. That's not going to happen with gold or silver. That's just not how those markets trade. I mean, and you have history of it. So you have stability with it. You also have real negative interest rates. Okay? Real negative interest rates is the fertilizer, it's the soil for precious metals to rally. Okay? And we know that central banks the world over are going to go deeper and deeper into negative territory, or they're going to enter negative territory, and they will embark on further rounds of quantitative easing. And don't be surprised, folks, that in the next round of quantitative easing, they change the name. Okay, this will just be a PR trick. We're just going to change the name. We're going to call it something else. It's going to be a bunch of BS. I know we throw a lot of acronyms out there: QE, QT, ZIRP, ZIRP, NERP, negative interest rate policy, NIRP. But guess what? The only ones you got to focus on is BS, and you know what that stands for, because that's all this is. It's a bunch of BS, a bunch of baloney, cockamamie crap. Okay, but this affects us. It affects your pocketbook. It affects all markets. And again, not just financial markets, but the goods and services you buy and use every single day. The U.S. 10-year Treasury lost 4% and is now yielding 1.49%. So below that 1.5% handle that we were looking at. Again, this is just a continuation of the markets anticipating slower domestic growth and slower global growth, and also anticipating that the Federal Reserve is going to begin another round of interest rate cuts, and perhaps quantitative easing in the not too distant future. We also have the 30-year bond below 2% once again. This isn't supposed to happen, ladies and gentlemen, but it is. Okay, the global economy, the domestic economy is slowing down. The bond market is like the adults in the room, and the stock market, they're the addicts, they're the junkies, okay? It's just a matter of time before the hangover sets in, the party's over, and they pass out, and they wake up with one hell of a hangover. That day is coming, okay? If I had a crystal ball, I'd tell you when we'd make a whole bunch of money. But that's why you got to stay diversified. That's why you got to stay vigilant. That's why I say it here every day, okay? It's not that easy to time these markets. It's not. It's not easy for the average Joe. It's not easy for the biggest hedge fund manager or any money manager for that matter. It's hard. It's supposed to be hard because there are smart people on both sides of every trade. That's how they work. If you don't have a stomach for it, get out. Just buy an index fund and let it do its thing. But that's where we are. We have the volatility index, the VIX, up 5% and now trading at $20.31. And so, you know, when we talk about our volatility model here, everything is just humming along exactly as we anticipate. There's even some market speculation out there, a couple articles that I've come across recently, where the technicals of the market, I'm no technician, I'm no chartist, but I know enough to get in trouble, as the saying goes. But I listen to a handful of people online and read what they have to say that I find credible. And I find them credible because I look at their track record, okay? Nobody's right 100% of the time, most definitely me. But when you hear some of the language that these guys are using, you know, you got to pay attention. And basically they're saying that, you know, look out below. Okay, there's no guarantee that this is going to happen, but there's really not a lot of support. If we have certain support levels in the market, okay, if these levels get broken, if they're pierced, and if they're broken convincingly, look out. Because, and we've talked about this recently as well, we could get down and retest the lows of 2018, boom, like that, in quite the hurry, before anybody knows what's taking place. Exactly what happened in December of 2018. It just happened so quickly. You can't. How many decisions are you going to make? Well, should I stay in? Should I get out? What should I do? At that time, you're already down 10, 20%. That's a big hit. It's a big hit. I mean, to get back what you lose on 10%, you got to make 11%. To get back what you lose at 20%, you have to have a 25% return just to get back to even. Just to get back to even. Now, is the president's plunge protection team going to jump into action if this happens again? Because we know the president sent out his Treasury Secretary, Steven Mnuchin, to the largest banks on Wall Street back in December of 2018, the plunge protection team. I'm not making this up. Look it up. This is 1984 George Orwell speak. This is frightening stuff. A plunge protection team. Talk about market manipulation. And what happened? Buy the dips. That's what the president tweeted. Buy the dips after there was a conversation with the plunge protection team. And then just a couple weeks ago when the Dow dropped 800 points because we had the inversion between the 2s and 10s on the U.S. Treasury notes, who was the president on the phone with? His plunge protection team. J.P. Morgan, Wells Fargo, J.P. Morgan, Citigroup, and Bank of America. I mean, surely they were just talking about golf and tea. I mean, come on, give me a break. Wake up. Okay, this is market manipulation at its finest or at its worst, however you want to look at it. Will they step up to the plate if these markets sell off again? Because I'm telling you, if you have another big sell-off like that, people are just going to throw their hands up, especially people who are in retirement or nearing retirement. They're going to say, I'm out. I can't do this. I can't do this. I can't take another 20% hit like this. Is it going to bounce back another 25% like it has? I'm not taking that risk. And why should they? That is a rational thought. I mean, if you look at the outflows in the stock market, I mean, they're huge. The only major positive inflow to equities has been share buybacks by these corporations. And those are starting to slow down. So there are a whole bunch of things that are starting to come together that just do not bode well for any type of significant rally for markets to make new highs. Could it happen? Sure. Sure it could. You don't know what Thunder Thumbs is going to tweet. You don't know if the markets are going to believe it. It makes no difference if they believe it or not. You don't know what the Federal Reserve is going to do and how the markets will respond to it. I think we are past the point of no return. Diminishing marginal returns are here to stay. That means that quantitative easing is not going to work. Fiscal measures from Congress and Donald Trump are not going to work. They're not going to pack any type of powerful punch. Now, again, that doesn't mean that the markets won't believe in it for a short while, but that's all it'll be. It'll just be another little shot of adrenaline, another hit of the drug. That's all it'll be, because it's all debt financed. It's all debt financed. It's all funny money. You can't run an economy off of this. Sorry to tell you. But the precious metals, that's really what I want to talk about here. It was only a short while ago that silver was trading south of $15 an ounce. Now we're at $18.17 an ounce in a short period, very short period. Gold was south of $1,500 an ounce, and we told you, look for that key number, 1,500. It's a psychological number. It's a technical number. If you pierce that number and you pierce it convincingly and you stay above it, we're likely to be in the midst of a new bull market. I keep to this. I think this is going to be multi-year because of everything that is going to happen. Central banks are going to continue to cut interest rates. They're going to continue to embark on quantitative easing. This is going to be, again, the fertilizer for these precious metals. Period. End of story. Now, the degree to which they rise is the question. What happens? Is there some sort of trade agreement? Maybe these precious metals take a hit because now, everything's fine. We're going to risk on again. We're going to get back into the stock market. It'll just be a matter of time before the market realizes, well, this was a trade deal, but my goodness, there's still a lot of deterioration in the underlying economic numbers. We're going to have revisions to the downside, ladies and gentlemen. We've already seen it. We've been talking about that here for the past couple of days, and I'm going to continue to repeat it because this ain't small potatoes. 500,000 fewer jobs were created. 500,000 fewer jobs were created than what was previously reported. Now, you would think that the markets would have sold off big time on that news. They didn't. They don't care because it's old news as far as they're concerned, because they're just worried about the headline jobs number that comes out for that particular month. That's all they're concerned about. They're not concerned about the revisions. The only time they're going to be concerned about the revisions is if that's the only story that's being circulated. That's it. Otherwise, what's Thunder Thumb saying? What are the Chinese saying? What are the Japanese saying? What's Jay Powell at the Federal Reserve saying? What's Mario Draghi saying at the ECB? That's all. That's all. It would have to be the only story of the day. And who knows? Maybe the Trump administration knew this and had to come out and say, well, we got to have a cover story. We cannot have them focusing on that because I'm the job president. Well, what happened to 500,000 jobs? Well, they don't exist. They don't exist. That's not a small number, ladies and gentlemen. That's going to have huge revisions on everything. Everything. And then when you look at the GDP figures, you know that a lot of these numbers, have been basically, it's been future demand brought forward, inventories being built up in anticipation of this trade war and amongst other things. And then you have the government, federal, state, and local, increasing their spending. So, how much longer is this sustainable? It isn't. That's the answer to it. It isn't. And again, I'm not praying or hoping for a recession, okay? I don't want there to be a huge disaster, a huge crisis, but there's going to be. There's going to be because of the irrationality and the irresponsibility of our leaders. This is what's going to happen. And again, recessions are a necessary thing. At the end of the day, they are good. There will be a lot of pain for a lot of people in the interim. I don't know what to tell you. I mean, educate yourself. Everybody has a smartphone. You got an internet connection. Educate yourself on something. You don't have to watch football all day. Read a book. Get prepared. I mean, it might be the brutal truth of it, but that's what it is. I don't know what else to tell you. And it's going to get bad. Because I don't see how it could get better. I'm just shaking my head right now. $17 trillion in negative yielding debt. I mean, you have to understand what that means. $23 trillion in debt here in the United States. That's our national debt. Junk bonds with a negative yield. Again, you can't make this stuff up. But that's the world in which we live. If you want to benefit from this, I'm telling you, do your homework, do your own research. I don't give financial advice here, but I tell you what I do. I tell you what I think. I give you the data. Gold and silver all the way. If there is any type of good news that makes the market sell off gold and silver because now it's a risk-on event and we're getting back into stocks, that's an opportunity to buy more gold and silver. And you can do that. You can own physical gold and silver. You can own gold and silver ETFs. You can own the mining companies. It's a whole host of ways that you can gain exposure to these precious metals. And I advise that you take the time to look into it and to do so. That's what I say. Because I think it's prudent. I think it's always prudent to be diversified. And I just think that the market that we are looking at, dead in the eyes, is saying we got more negative interest rates to come. $17 trillion might look like child's play over the next 6 months because it was only a few months ago it was $10 trillion. Now it's 17. So you do the math. What do you think it's going to be in 6 months? Okay? You think the stock market's going to be a whole lot higher? Maybe it will be, maybe it won't. What do you think is going to happen in the bond market? What do you think is going to happen in the oil market? What's going to happen with this trade war? What's going to happen with the escalation between India and Pakistan? The trade war escalation between South Korea and Japan? The back and forth between the United States and Japan? Because again, Donald Trump says, oh yeah, Japan, they're making a whole bunch of concessions. And Japan comes out, and no, we're not. So who do you believe? Who do you believe? Iran, there was a slight glimmer of hope over the weekend. A slight glimmer of hope because the Iranians were in town for the G7. And maybe there would be some dialogue for a peaceful resolution between the United States and Iran. But nope, not going to happen because now you have President Rouhani of Iran coming out and saying, no, the only way we are going to negotiate with the United States is if the United States lifts all sanctions. That sounds very much like the Chinese. We will talk if you remove all the tariffs. Well, that's just not going to happen. Donald Trump is not going to lift all the sanctions off of Iran. This is maximum pressure, baby. He ain't going to lift them. And you have China. The tariff man ain't going to raise the tariffs. He ain't going to lift them, I should say. He's not going to lift the tariffs to get back to the negotiating table. China's going to be a boogeyman. Iran's going to be a boogeyman. Little Rocket Man continues to shoot off rockets. He has a whole bunch of entities out there that he can point the finger at. And I told you this months ago, that this is exactly what the president would be doing and will be doing here for the next 18 months. Set your watch by it because this is what he's going to do. I mean, we knew the tweets were coming out. We did the week ahead, look ahead segment. Look out for Donald Trump. Look out for Thunder Thumbs. Oh, there it came. Monday morning, boom, futures were down. Bam, here comes the tweet. Boom, up 500 points on a swing. You can't make this stuff up. But it's becoming so easily predictable that it's actually becoming frightening. Because if little old me sitting here doing a podcast can predict what the president of the United States is going to do, I bet the Chinese are starting to catch on too. So we have market disbelief front and center. The credibility not only of the president himself, but the office of the presidency. And even if you love and really have a lot of respect and admiration for this president, it's one thing. But what about the office of the presidency? Do you really think, you got to look beyond that? You got to look beyond the man and look at the office too. I'm sure you have a lot of respect for the office, but I mean, come on. The credibility is being called into question now on a daily basis. I mean, the Democrats, the left, the anti-Trumpers, they already questioned his credibility from day one. Just like the Republicans would have questioned Hillary Clinton's credibility from day one. Okay, so that's a given. That's the starting point. Now it's the people such as myself who voted for Donald Trump who said enough's enough. I can't support this, and I'm not going to support this. So where are the other fiscal conservatives? Where are the other libertarians? Where are the other Republicans? Anybody else, even the Democrats who voted for Donald Trump, who crossed the line and voted for Donald Trump, do they still agree with him? These are serious questions. So market disbelief in the silver rush. Thank you so much for joining me today, ladies and gentlemen. It's been a pleasure having you. As always, please like, share, subscribe. Get the word out and leave your comments. We do love hearing from you. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.